Hey there, welcome back to another RiskWell pricing guide video where we answer the questions: how much is my insurance supposed to cost? How does that price get determined? And most importantly, what are actions and steps that you can take to impact the price of your insurance either up or down? Let's jump right into it. Like all of our other videos, you can see it here in the playlist on YouTube or up or down on our website here. Not sure where you're watching this video, but look above or below for the other options for the other pricing videos. In this video, we're going to focus all about workers' compensation insurance, commonly just referred to as work comp. And I've got great news for you. When it comes to the pricing of a work comp policy, it is probably the most favorable of any insurance product that you can buy, because you as the policyholder, as the business owner, business executive, you have really high levels of control over exactly what happens with your pricing, because work comp insurance pricing is just a formula. The whole thing is a formula that you have access and impact to. The first component is the rate for the class code. Every kind of labor out there, from a roofing contractor to a local florist shop to a manufacturer, every kind of labor you can imagine has a class code assigned by the Federal Department of Labor and your state departments of insurance. Every class code has a rate that is assigned to it, but the rate and the class code really dictate where everything is. From that base rate that gets assigned based on the loss cost multiplier and the class code, that base rate gets adjusted up or down based on your loss experience, commonly referred to as the X mod or experience modifier. Very simply, there is a baseline expected number of losses, frequency and severity, total loss dollars, that are just anticipated based on your kind of business and how much payroll you're running and what class of business it is. So if you are less than expected on the losses, you have less than a 1.00 experience modifier. If you have really good experience year after year after year after year, that X mod can get lower and lower and lower, and that is actual dollars off of your premium that you pay. If you're less than a 1.0, it's literally just percentage points. So for instance, if you had a 0.8 X mod, then you would be getting a 20% credit on your base premium, which means your insurance costs 20% less. If you have worse than expected loss experience, then you end up with something that's higher than a 1.0 experience modifier, which again is just simple math. It is adding to your premium, otherwise known as a surcharge. So to summarize this, the workers' compensation price that you pay is starting off with a class code multiplied by the amount of payroll that you have multiplied by the rate. That gets your base premium. Then you have either debits or surcharges up or down from that number, and then any sort of discounts or credits that you may be able to qualify for, like using a specific healthcare provider network that the insurance company connects you with. And there's a couple of other tricks that you can have up your sleeve when it comes to the losses. We're going to end our video with this. If you don't have a return to work program or a light duty program where you're minimizing the impact of someone's work comp claim, there's medical dollars that go into a claim, which is actual like dollars from a provider. And then there are what are called indemnity dollars, which is non-medical expenses. So lost time from work, physical therapy, loss of consortium, additional services that the employee has to take on at their home. All of those go down as what are called indemnity dollars. And indemnity dollars impact your rate at a higher level than the medical bills, because if you can have a work comp claim that slashes the indemnity dollars, where you get someone back to work faster and minimize the indemnity dollars in the claim, you can actually see a reduction by 70% in most cases, 70% in the impact to your experience modifier. So if you have a medical only claim, you're going to see a big reduction in how much it impacts your loss experience. And the second thing you can do to help protect your rate and keep those costs down is just take a deductible on your work comp policy. Sometimes that can be as low as $1,000. Most of the time it's $2,500 or $5,000 that what we recommend our clients carry. The insurance company will give you a credit towards the premium if you ask for it. But a lot of clients don't get the deductible on the policy, but inside your own head, you're saying, hey, you know what? I'm going to absorb the losses that are really small. If somebody, cuts their finger on a job site, I'm not going to turn in a claim for $800 for them to go to urgent care and get bandaged up. But if you're going to absorb those small losses anyway, you might as well go and tell the carrier, hey, put a deductible on my policy. All losses less than $2,500 or $5,000, I'm going to absorb those in-house. We're not going to file claims for that. Those two things are probably the best thing that you can do, the best practices that you can do to lower and protect your insurance premium. Return to work program and putting a deductible on your work comp policy. And that's it for this RiskWell pricing guide for workers' compensation insurance. Hit us up if you want to talk further. Happy to help with any questions you may have. 469-678-8001. And that is it for this video, boys and girls. Life is risky. Risk well. Y'all take care.